So Gary, you and I know each other. We've got a lot of background in terms of business over the last year or so. I work at Node 40. You're an investor in Node 40. You're chairman of the board. Real quick, how did you even get involved in entrepreneurship activities and specifically digital assets?
Yeah. Well, Norm, thanks for having me. I have been. I didn't realize this till too late in life, but since the age of 27, I've only been in startups, or I guess that makes me a lifelong entrepreneur. I've just never been in the big corporate structure. I was in the very, very beginning years, and was fortunate enough to work for a startup. I think there was 12 commercial people. This is 1987. 12 commercial people in the operation, and 3 years later, there'd be 600 people there. And 2 years later, it'd be a Fortune 30 company. So it was a really exciting time. And it happened to be in an industry that was it was in the natural gas and electricity industry in the United States. And it was undergoing a massive regulatory shift, a pivot point, if you will. And that would begin my career of finding or being pushed into industries that were undergoing significant change. So if you look at my career, it's really been around either a regulator is changing the entire construct of how a market works, and they usually do that to create competition, or there's monster commercial pressures, or technological challenges. Like in the payments industry, it wasn't so much regulation, it was more about the structural shift of how payments was occurring, how it had been built on point of sale, you and I being in a grocery store together, you being the clerk, me being the consumer. I present my credit card to you with a license, and I sign a wet piece of paper that says, hey, I'm buying this $300 TV. I'm going to take it out of the store from Norm here, and I have a receipt, you have a receipt, and the credit card transaction worked. However, you fast forward 2005, 2011, post 2008, the massive recession that pushed everybody in the house. Then you slam COVID on top of that. Well, we have had a structural shift. So you had structural shift, you had a regulatory, it really wasn't a lot of regulatory push to have this happen. What was really happening was you had Google, Facebook, the entire structure of the market, how merchants and retailers started advertising was different. You slam COVID on top of that, and people structurally shifted the way their consumption of goods and services were being executed, which was really a card absent transaction where you and I are no longer having a relationship physically. We're doing it online. And I build the case that when we noticed that, I'm like, hey, this market wasn't built for online transaction. It was built for peer-to-peer, human being to human being, having a relationship. As soon as that relationship started breaking apart, where there was no physical, you think about a consumer walking into Walgreens is a very different experience than me sitting on a keyboard saying something about having a cold, which I have right now, and then all of a sudden getting a bunch of ads on cough medicine. Yeah. Okay, now the cough medicine ads are bringing me into the store. I'm not walking into the store. I'm being pulled into the store. That is a very, very, very different exchange. And the intention alone is really different. And I realized, hey, look, chargebacks are going to just explode, because you have one event where you have a conscious, overt decision of walking into the store, going to get something, versus a highly reactionary response from a consumer, really just being hammered with ads and little blips and triggers to do something. And it became my imagination anyway. My postulate was that the consumer in this matrix of retail business is basically doing one thing. Their job is to consume. consume, consume, consume. It had nothing to do with making payments, nothing about paying for anything, nothing about keep your refunds down, and most definitely keep your chargebacks down. It's simply consume. And so we built a business around that, probably a $500 million business that I've been able to exit, called Chargebacks 911, and ran into the digital world. And, my experience with, hey, wow, you could disrupt the entire energy complex. 50 or 70 guys in the world literally rewrote the rules on how energy moves. I am quite certain that if you can do that, you can absolutely change the way money moves around. Because if my credit card defaults or declines, there's no big issue. Okay? Nobody's going to die. If power stops, if natural gas stops flowing into a hospital or electricity stops flowing into a hospital, people die. And none of that happened, okay? In any country that's deregulated energy, none of that happened. No kilowatts stopped flowing. No thermal units stopped flowing. There might have been bankruptcies, but that's simply a piece of paper with a name change of one entity to another owning a power station or whatever they own, the grid. So it's just been 30 or 40 years of highly disruptive environments that require a little bit different thought process than most legacy players. When the legacy players undergoing this type of structural shift, it's very difficult. You came from these big companies, which I admire many of these big companies. Their culture is not well suited for adapting to monster 180-degree type changes, right? Not to mention that you also have most of these companies are public, and they're having to work to the 22-year-old analysts on a quarterly earnings report. It's hard to build a multi-billion-dollar business, or in the Node 40's case, like I love us being private because we can make decisions at Node 40 for the long term. Your competitors, I don't know if people know, but I own like 40% of Node 40. I'm really happy about this private equity investment in Node 40. Because most of your competitors have raised money at such extreme levels and so much of it that they're having to report to their investors and say, hey, look, we're probably not worth $1.8 billion today. We need to raise some more money, and that valuation is probably a lot lower. Being private is really cool because it allows you and I to make long-term decisions and not worry about next quarter.
Even private, even those companies are private, but yet, if I take it, if they bring in certain types of investors, they start to skew toward a public and have to make short-term type decisions. More,
yes, so. Yeah. Anybody that invested in companies in tech, fintech, in late 2020, 2021, and 22, they're probably upside down on their investments, and that's why you've seen so much money frozen up on the sidelines, because they're trying to fix their problems. These companies will force management to do things to get them out of the negative, right? To get them into a liquid event that gets them out.
Right.
So we've been bounced around quite a bit, but when these markets undergo this type of disruption, probably better than I do because of the firms you've worked at, most of these companies are not well positioned to move quickly, decisively, without a bunch of months and months, if not years, of dialogue. And we're seeing that absolutely in spades in the digital asset industry from the legacy viewpoints, right? Like you're seeing so many large companies go, oh shit. Like this Treasury document that came out, right?
Yeah, Gary.
I should be interviewing you, man, because this Treasury.
We're going through a big shift. Node 40, as people probably will learn, is a data company, and the Treasury, the IRS came out with, and the Treasury came out with regs about 2 months ago, late August, requiring massive amounts of data to be produced on every single digital asset transaction, specifically 1099 type data on almost every single digital asset transaction related to U.S. brokers, including stable coins, assets that are tokenized assets that are transferred on chain through blockchains, etc. And that data requirement will be very similar to what the brokers have to do today for stocks, bonds, commodities, etc. We've got several billion 1099s today in the marketplace. And what the IRS is proposing was so broad, it could result in 8 billion 1099s pending, changes to those regs, right? Plus, massive amounts of KYC in a market that's not really used to revealing personal data. That's a big shift. There's a lot of big shifts coming, Gary. I mean, where do you see, like, let's say, compared to the investors that came in, like you talked about earlier, into digital assets 3 years ago, right? Into digital venture capital companies. Do you see another 180-degree shift? Do you see this particular industry shifting again, and how so in the next, let's say, 2 years?
Well, a 180-degree shift would be back to where we came from. So I definitely don't see that happening. I think it's very interesting that, you talked about the Treasury document. And if people don't know what you're talking about, it might be good to post that up in this interview so that they have access to this document.
Yeah, I'll add a link to it.
Yeah, so just to give everyone that's listening a little background here. The FASB rule change, the GAAP accounting rule change that I give Michael Saylor of MicroStrategy almost full credit for pushing through the accounting world to have corporates be able to put Bitcoin on their place Bitcoin on the balance sheet without draconian pricing treatment. The old GAAP accounting required them to take the lowest print of the year. If it was trading at $15,000, he had to mark that on the company books, and it stayed there forever until the next year, and he'd get a new print. So, but he could never, ever, if it goes to 45,000, he can't upgrade that. So,
right.
Bit of a draconian perspective on crypto, right? On Bitcoin in particular, that rule has changed. Weeks after, if not like within a week, the Treasury Department releases a 350-page document. If I'm not mistaken, it was on a Monday. Now, most people don't think about this, but that Treasury document did not get created Saturday and Sunday and released on Monday. That Treasury document that was released in August, as you say, 1 week after the FASB rule change, has been in the works for months and months. And it actually set the low price of Bitcoin for this year. The low price of Bitcoin was seen shortly before the Treasury document came out. Now, why do I say that? This is such a big deal that the U.S. Treasury Department would spend months writing a document, whether you like the document or not. They are validating this asset class. They are putting rules around this asset class, saying this is what we expect you to do if you're going to play in this world. And I actually think that we will get to a point where the digital asset world will be, there might need to be 8 billion 1099s, man. See, I actually think some of these investors shouldn't even be in this industry. They should not be investing in this industry. A lot of the players that are in this industry right now are very small people. And they're just not investing large sums of money. I mean, at Node 40, we have seen clients come through the door. This is why we quit taking small consumers with $400 in 12 wallets. Well, if you bring that to Ernst & Young or any large accounting firm, any legitimate accounting firm, I mean, you can do this on TurboTax if you want, but you're going to have to be willing to withstand an audit. And I'm not putting TurboTax against the IRS. Okay. I want my position is going to be well defended. So I think that, there may be some people in this space that aren't well positioned to be in this space. They shouldn't be playing, because I do think the audits are coming. And this is very different than managing a pension or a distribution from a private company or a public company. managing this exposure on taxation and how the crypto moved and telling the story is massively different. And it's just expense of protecting yourself with a whole storyline and accuracy is going to be a cost of participating in this space. So I don't see it going back to 180.
No, so in that respect, so here's how things were, I believe, about a year or two. I think you're right. With some of these investors came in, and what they could get away with is C minus D plus data, right? Produce a tax return, produce an accounting report with C minus plus data. Who cares if it's wrong? Go ahead and audit it, IRS. Go ahead and audit it, UK, HMRC, or whoever it might be, right? I don't care if the data is accurate. You don't have any accurate data yourself, IRS. So, enjoy. I did at least a decent job. If I put it in front of a judge, that judge is not going to be able to get this stuff anyway. And off I go to my next investment, right? But what's coming is, like you mentioned, the regs, the Treasury regulations came out, just like stocks and bonds, right? You can't just BS your way around what you earned on the stocks, what you earned on the bonds. If you get from Charles Schwab a 1099, a 1099 INT for any interest you've earned, all that kind of stuff, this has been around forever, right? If you move your assets from Morgan Stanley to Charles Schwab, they themselves will trade reports so that the IRS can follow all this.
Correct.
The Treasury came out with these reg packages that I mentioned earlier, and you were talking about in late August, that will require all of that kind of reporting for digital assets. It's going to build up little by little. It's not going to take place all at once, right? It's going to start. Some of the reporting will start in 2025, ramping up in 2026 and 2027. And the regs are proposed. The IRS has to continue to finalize them. Plus, they may come out with additional rules. So when you're trading high level, when you're trading on Coinbase is going to have to track your tax basis and what you made on that digital asset. Down the road, if you move from Coinbase to Kraken, those two are going to have to correspond with each other to say what your original basis was. They have proposed doing the same exact reporting for DEXs, the decentralized finance protocols. All these payment, if you move assets through payment processors, right? And you know that area, Gary. They have to right now report, well, payment processors that process Bitcoin transactions, stablecoin transactions for payment, they're going to have to prepare the same reports. And number one, there needs to be data providers to capture that data. But number two, as you alluded to earlier, you're not going to be able to get away down the road with C plus D plus C minus type data for your tax returns, for your accounting, for your audits, all that kind of stuff, because the IRS is going to be getting data. It's not going to be a black box. You're going to have to be able to show, hey, how did you produce the data for this return? I mean, there's 1099s being reported now. The IRS, the UK, they're all increasing their capabilities. You can't just come in with just, basically junk material to back up your tax return data.
Yeah. Well, I think you'll have the option to use C and D solutions. You got to remember though, like when I was meeting with an accounting firm just about 3 months ago, and they said, "Hey, Gary, because you and I were proposing to this particular firm, hey, look, we'll become your standard," because Node 40's process is basically to go into a top 300 accounting firm or forensics audit firm, or in fact, a legal firm. Like Perry and I just had a conversation yesterday with another litigation group that specializes in digital assets. They're going to acquire our services because they want to be able to protect their investors, their clients who happen to be investors in crypto and digital assets. They want to protect against one thing. They know their clients are doing the right thing. Most clients that actually have auditors are behaving. And the problem is the legal firms and the accounting and forensic firms, they have not invested 5 to 6, 7 years of their life and millions of dollars into building a solution for this. They have been watching Bitcoin and this world kind of Okay, well, we'll get our shit together when this becomes a real market. It is being validated now. This is my point. All these actions by the U.S. government are real serious indicators of they know they can't stop it. So what they're going to do is they're going to figure out a way to collect tax on it, which for some reason, some particular crypto people believe that just because you live in the U.S., that you can swap Uniswap for Bitcoin and you don't have any tax exposure. It's like, I don't know who told you that. Okay. There's people in Bitcoin that think that they never have to pay taxes because it's Bitcoin. And I'm like, wow, what cartoon book did you guys read sitting on the toilet? Because that's just not real. But I think so you can use a D-class service, but you have to be willing to understand that if you get a letter from the DOJ, the SEC, and or the IRS, there is no option for you not to respond to that letter. Okay, you are going to respond. And if your position is $400 or $4 million or $40 million, you have to respond to the letter. Okay, and that immediately engages expenses because most people, unless you're just going to roll over, most people are going to have to go hire a professional. And, the experience that I went through with you guys a year and a half ago showed me the value of Node 40. I took 12 hours, 12 professionals at $1,000 an hour. That's $120,000 a day. I took $120,000 expense day for me of legal people and forensics down to 1 hour. Okay. And I paid you guys $7,000 to use your tool. So I kept because as you know, it's not the investor in Bitcoin or in these coins or assets that are the problem. It's the professionals around them. The professionals have to charge you fees when they're doing all this. Yeah. And if they don't have an easy way to do it, right? Like I could just bring my little Excel spreadsheet and go, hey, Ernst & Young, look at me, man. I made $130,000 on my $40 million crypto position this year. And they're going to look at me and go, dude, lovely little spreadsheet. Well, we have to do our own analysis. And that's where Node 40 really steps in, right? It does an analysis for the professionals or for the investor in a way that doesn't have the investor, moving little numbers around to minimize their tax exposure. So the industry's just growing up, and there's never been tools here that would allow this to be a professional business. I think that's really the way to look at it.
That's I think the entrance of the traditional players into industry is going to be a bit of a game changer on a couple of fronts, especially even for Node 40. Like you said earlier, we had a couple of firms we talked to, Gary, where they were spending hundreds of hours to process data, came in and tested us. And they tested us because they didn't want to just see how fast we could process the data. We processed the data in less than an hour. But they also looked at data that they had processed in prior years that they spent several hundred hours doing because they wanted to say, hey, look, not only can Node 40 do it fast, it compares accurately with our own data we produced that took 300 hours. Yeah. And accuracy is going to be key. TradFi players are going to be coming in, right? Investing in this asset class. And two things. Number one, Node 40, I mean, we analyze data for parties, high volume parties, right, that process hundreds of millions, if not billions of transactions. We're talking to people about using those capabilities for 1099s themselves. TradFi players will know that, hey, the data is accurate and we can use Node 40's high-powered tools to do our own accounting and tax prep. Meaning that, quite frankly, the IRS, even though these high-valued players that have $400 million of assets, have a big book on which you can audit, those guys, I came from a large accounting firm. It's not easy to go after the super big players if you're a government auditor, right? They get their stuff right. They're the ones that try to go for accuracy. So if you're someone out there that thinks, hey, look, I've only got like 500,000 invested or 1 million, they're going to go after the $400 million player. That's not correct. That's not completely correct. They're all
Everybody keeps saying this, Norm. Everybody's saying, hey, they're going after the big guys. I'm like, they're going to hire 30,000 IRS agents. They're going to go after everything. I mean, I think what pissed them off, and I think the government actually has some reason to be a little irritated by this industry. And one of those is the amount of tax filings that were done a year ago exploded relative to the prior year. And why was it? It was all lost tax harvesting. And you know, if you're the government, you're like, hey, look, guys, nobody, I think less than 1 million people pay taxes out of 50 million people in the United States that have said, hey, we own some digital asset. Less than 1 million people paid. But last year, you know, all the tax forms went straight up because everybody had tax losses. And you can't just do this one way. You can't just do your tax loss and then the next year go, hey, gosh, I've made $1 million on crypto and I'm not reporting. Look, the accounting firms alone are not going to expose themselves for any client to any kind of shenanigans. They remember the Enron thing, okay? It wiped out an entire accounting firm. It should have wiped out 4 or 5 of them. That's why all these accounting firms remain private today, right? And so they don't want that exposure. These are private and like they're big law firms, really. So I don't think that they're going to put their name on anything. I mean, we're right now having a problem finding really highly qualified audit firms that will do any of these exchanges, right? Like people are like, hey, I don't want to get in trouble. I don't know where all this data is. So this is a sign of the reason I brought back the natural gas business and some of the disruptive periods. These industries always go through this. The tools necessary to operate in a market that's changing aren't there. I mean, this is like needing a highly refined tractor that can really, I don't know if you've ever seen a guy that can dig a ditch, but man, some of these guys can do stuff with machines that are like, he can lift a piece of paper 3 feet into a wet hole, right? I can't do that. You couldn't do it, right? We'd be falling off. We'd be trashing the tractor. These are tools. Node 40's built tools that are specific for, and it was from the perspective of the trader, right? A guy that does a lot of volume, multitudes of jurisdictions, multitudes of different products and services. He's trading $100 bands. I think that's going to get greater as Bitcoin becomes more relevant in the market. We're going to see a lot of volatility. This is going to be very complicated to track, trace, and tracking and tracing it is not the problem. It's placing financial value on these transactions and being able to tell a story 4 years from now as to what that coin did or what that investment did over the 4-year life of that family, right? Or entity. It's going to move from, people are forgetting these coins are going to move, man. I won't always be with 1 or 2 banks. I'm going to probably have a relationship with Fidelity, and then I'll have a relationship with someone else. Maybe Bitcoin's at $200,000 one day, and I start borrowing money against it. Like, I'm going to need a Node 40 that can show how I did it, what I did, and what my cost base is, so that I don't get abused by either a government wanting to collect tax they don't deserve or abused by the professional who's having to charge me on an hourly rate. I mean, I don't know any lawyers that do this on a contingency. They do it on an hourly rate, and at $700 to $2,000 an hour, man, it becomes really expensive. And if I'm having to pay, say, a KPMG $200 an hour, I want them to use Streamline Services to give me the blue check mark, right? So I just think this is about this industry growing up, and I'm really, really excited about Node 40, and the opportunities here are staggering. Okay, I don't actually, if you love supply and demand, I don't actually think there's enough suppliers like Node 40 in the market to actually meet the needs of the market.
When do you think, Gary, where do you see that market in How do you keep, in terms of when you evaluate your node 40, like short term versus medium term and long term? When do you see um, the market? How do you see the market developing, at least, let's say, over the next year versus 2 years?
I wanted to write a letter to the government, and I don't even know how to do all that stuff. But, I said about a year ago, hey, we probably need an office in Washington. I'm really disappointed that the government believes that we're not ready. Like this whole, hey, this is going to take 3 years. Dude, launch it, okay? Make the user, the investor, responsible for the investment he made and pay taxes, okay? I believe in paying taxes. I believe in paying not one penny more taxes than all the rules allow you to pay, and then arbitrage all the rules accordingly. We're ready. Dude, we could take 30,000 clients tomorrow morning and be ready for the next April. No problem. We built this for scale. Other people went out and did the old SaaS, raised a shitload of money, stupid amounts of money. Then they went out to the consumer thing because that was the Netflix model. That's been the model for the very end of the 20th century, right? Sell something for free, get a bunch of users on it, like Facebook, get a bunch of data, try to build an AI around it, and then one day you'll make some money. The problem is they raise money at ridiculous valuation. All somebody has to do is say, hey, I have a digital division of expertise, and we can handle everything for you. I would much rather make one payment. I would much rather have one guy like a doctor who sees my entire portfolio. He can give me better advice than having 5 or 6 different players. So I'm sending a warning out to all analog players of the 20th century, accounting firms, tax firms, forensic firms, audit firms, policing, enforcement authorities, DOJ, SEC, whoever. Dude, these tools are available right now. Okay. We're ready. And dragging this out over 3 or 4 or 5 years, I don't understand what the delay is. We're going live with Bitcoin this first quarter of this year. This is becoming a big boys market, and it needs big boy tools. So we're ready. I don't know why other people are suggesting the IRS. I would love the IRS to have a serious conversation with us and go, look, if your professionals are telling you they're not ready, how about we just deploy Node 40 into the IRS and we'll get them to get ready? Because we're ready. Like we could take the IRS business right now and provide the data that's necessary for the IRS to understand how these coins have moved on and off chain, or an NFT, or whatever asset's being digitized. And then you're going to have to track the digitization of that asset class.
In a way, to me, it's like become of far greater importance is they can do that in a way with us where there's an audit trail and you can actually corroborate what you did is accurate. So you go in front of a judge and you're not being embarrassed. Again, you're not embarrassed like, okay, oops, sorry, we got this all wrong, which means that one case you took in front of the judge, that's the last case you're taking for a while. So I think that's the key with us. I always try to harp on that we have the data, we have rich, deep data plus with the audit trail. And you're right. I think the market should be ready to go now. I think, of course, some of the other players, Gary, we talked about some players are pushing back. Hey, we're not ready from the standpoint of I'm not ready to KYC all of these people. How am I going to produce this many 1099s? Is the industry really ready to do that? I think the industry is pushing back in some ways. You may not agree with that. I think that they maybe undersell themselves in terms of their capabilities, but they are pushing back to say, give us a little more time.
Yeah, well, look, this is what they always do. So this is the benefit of being in 4 industries on 2 continents is you begin to see the behavior. Look, I'll put a bond up. We're ready. Okay. We can handle 50,000 clients. We know accounting firms that have, 25, 35,000 clients, and they're getting to maybe less than 100. Okay. This is a massive amount of revenue for a large accounting firm to just walk away from. I mean, I was with a large accounting firm. I'm like, hey, you guys could make $500 million this year if you would have addressed all your clients in revenue in a fair value exchange to those customers after they paid our fees. Okay. With their own white label solution. Let's call it Super Accounting Firm XYZ. It's called Super Accounting Firm XYZ. This is the solution. It's one standard across their entire platform. It zeroes out. That's what I love about our team. Okay. We do not believe in, hey, man, it's close, $40 million position. We got within 40 grand. Our team is like, hey, we're getting within a penny.
Yeah.
Okay. These are digital assets. They should be exact. I think what we're seeing is that no one's invested any money in this problem. And this is what I'm really great at, right? While everybody was like going out and buying Dogecoin and trying to get an exchange and a position in Binance and a position in FTX, I'm like, hey, where are the picks and shovels? Because I don't care what Bitcoin's going to become or not become. I know that the tax man's going to get paid. You're going to have to account for this stuff. This is just basic, right? And there's dozens of examples of businesses that are going to grow up around this industry. That like just the convention business alone, the teaching business around digital assets, that will become a whole education field, consultancy, whole education field and consultancy for digital assets. That some of the legacy players will move, but they have to move all the way. And I think that's the problem. We've had so much noise in this industry, so much circus type carnival noise, that these big accounting firms and professionals, they get really nervous of putting their, neck out on the thing going, hey, what if we pick up one of these guys that aren't good? Like, what if we pick out a bad guy? I mean, the FTX guy convinced a lot of people he was legit. So we've had a lot of starts and stops in the industry. I think we've seen those now. We've seen probably the vast majority of that start-stop convulsion type behavior. That's probably behind us now. I would hate to see us go into this. Okay, it's going to take us till 2030 to sort our shit out, because that doesn't solve any problems for us, right? It doesn't. You and the KYC stuff. I don't understand why the KYC is such a big issue. If you don't want to be KYC, you need to leave the country.
Yeah.
Like it's, unless you're going to go change the rules. Okay. But to me, that's not going to happen. And to suggest that the tools aren't available to the U.S. government right now, today, or to any professional firm, it's simply the professional firm is making a decision not to either acquire these tools, buy the whole bloody companies. Like, there's 5 companies out there. Go buy them, or go lease the software, or go build the software. Shame on you if you haven't been building the software. Right now, when I say shame on you, I'm really kidding, because in 40 years, there's not really one or two stories where large corporates built anything, any software. They buy software. They use other people's tools to deliver services to those customers that they have. They have millions of customers. We don't want the millions of customers. We want hundreds of customers that are serving the micro market, because there's a lot of different value for that, right? Like, there's certain things I'm not going to do. Like, I'm probably not going to do accounting on legacy assets. So that's why us having a relationship with, say, an Ernst & Young, a KPMG, Deloitte, all 4 of them at one time, that's really valuable, because they retain me. They retain all my legacy business, and they get my digital business. And This is the problem, okay? If I move my digital business, because Bob down the street, my accounting firm for 40 years, has never studied any digital, or he only has 2 customers, one and another guy, I'm moving my entire portfolio to a digital expert, because my digital position is getting ready to be larger than all my legacy assets. And even if it's not larger, even if it's only 5 or 10%, it's very complicated. So I just need to move over to firms that are saying, hey, we are digital experts. We are in the first half of an inning of a 15 or 20 inning game here. And just pushing this down the road, to me, is one, grossly unnecessary. Two, it's not going to achieve any tax income for the U.S. government. Whoever's going to be the next president of the United States, like, there is money sitting on the table that I believe digital asset players should be paying, or they should leave the United States, or get the rules changed on how we pay taxes. It's one of those three options.
Gary, the other thing is, it's just a matter of time. I was talking, so it's just a matter of time for the rest of the super developed and developed world starts catching up with their own rules on these things, which they are already. There's rules in Europe, CARF. There will be rules coming down the pipeline in Latin America. Sooner or later, where you can go is limited to little islands, possibly. You know what I mean? So it's just, you might as well get started now on doing it right.
Well, let's talk about the little islands, okay? Because I think this is a great myth in the industry. Puerto Rico, Caymans, DR, right? Any of these tax haven environments, you're the one that needs these services more than anyone. I mean, if you're in the Puerto Rico and you have a 20% tax arb, and you're sitting there going, hey, I don't need to do taxes. Well, okay, that's awesome, dude. But you have a target on the front of your head, the back of your head. They know exactly what your IP address is, because you're arbitraging the U.S. government. And you're telling me you're not spending $20,000 or $30,000 a year making sure that you can protect yourself against a draconian audit that can go on for years? Dude, I just got through with 3.5 years with the U.S. government 3-letter agency, over $100,000 that I should not have paid, but I paid it. Okay. It cost me $7 million to defend this case. It took 2 years. Okay. So let's assume that was $4.5 million of it. It took 2 years just to determine from the government that they thought there was $100,000 of expense. So I was going to spend $4.5 million no matter what, just to get to a position going, oh, you want $100,000? Here, let me write you a check, man. Like, I can't wait to write a check. I actually didn't want to write the check because I think that's the wrong solution for somebody that's not guilty. But it became so painful. And this is the world we live in today, okay? This is enforcement through questions. So it's not so much the penalty, it's the pain of going through it. It stops your whole business. I don't care where you are, DR, PR, Cayman Islands, man, you are going to be audited. I think people forget there is an expansion budget for the IRS of how much? 55 billion?
Well, I think it was 80. They scaled it back to like 50 something or 60, something like that. It's still a good amount.
Monster number, man. Yeah. Okay. And once the Republicans and the Democrats, Congress and Senate have approved something, the IRS is going to use those funds. And maybe they're going to go and audit the oil companies. I don't think so. I think the oil companies already know how to do the audits. I think they're going to audit new industries. Okay. And that big industry is called the digital asset age of planet Earth. And it's only getting bigger from here.
Yeah, it's at this point, it's just a matter of time, like you said. Yeah, so Gary, taking all that into account, I mean, you've used Node 40, like you said, you've been dealing with all these legal issues, et cetera, that you mentioned. You've transitioned to digital asset as a big part of your portfolio, have needed accountants, all that type of stuff. So you use Node 40. Why did you invest in Node 40? You said 40% stake. That's a big number. Like what drew you to Node 40 besides just being a platform customer?
Well, funny enough, I actually started looking at you as an investment before I used you.
Okay.
I
didn't know that.
Oh yeah.
I didn't know that was the order. Yeah.
Not a client. I was not already a client. I never even thought about this. What happened for those people that actually believe in karma, I sat down one afternoon. So I've been doing this my whole life, and I'm at the age where I'm like, hey, do I want to just go fishing every day, or do I want to build another business? Because my last one took 10 years. It's a lot of work, a lot of travel. And I was sitting down and I said, look, and I was buying Bitcoin, and I'm not really I'll get in trouble, Norm, if I can just trade. I need people like you for me, it's really cool to have a bunch of smart people around me that I can communicate with and, challenge and be challenged. So I wrote down, I said, look, if I'm going to go do another business, it has to grossly outperform Bitcoin. And that's saying a lot for Node 40, because I think my Bitcoin investment, which is growing every day, growing by me investing every day, actually, not just the price appreciation, but I am a monster believer in this. If I'm wrong on this one, I will be shocked, absolutely shocked. But as my investment grows, I started experiencing a lot of, the commodity risk, the price risk, the underlying price volatility, which I actually think is one of the great attributes of Bitcoin. We can get into that in a different conversation, but it really does lead to Node 40, because I think we will see continued volatility, expanded volatility. I'm very disagreeable with a lot of different people that are saying we're going to see less volatility in the next couple of years. We're going to see much more volatility. There's a different player coming to this market. So in writing down that whole thing, I said, look, it has to improve over Bitcoin investment. It has to have an excellent management team of IT people, of highly real AI, computer science engineers. They're white, pasty, they like being in their cellar, plopping out code, and their hubris, their egos were not unbalanced with what they were doing. And what I mean by that is I wanted to be able to find a founder like me. I am like this. I mean, people say, hey, Gary's ego's over the top. Actually, the more you know me, there's so much I don't know how to do. So I was hoping to surround myself with someone or some people who looked at my expertise as building businesses and understanding commercial, how to maneuver commercially through the market. Hey, if I could find somebody that really values that, then I'll do another investment. So I go on LinkedIn, find out who the CEO of Node 40 is, and I send Perry a note and said, Perry, here's my phone number. Call me, please. He calls me 20 minutes later. I think a week later, him and his CTO were in my home, spent 3 or 4 days with me. And I love their business. I loved it because I've been here before, and I know that the accounting and the tracking and the risk management. See, this is really a risk management tool. We talk about accounting and tax a lot, but in reality, this is a risk management tool. If Node 40 can do accounting down to the penny or micro penny on 1 billion transactions. Now remember, I'm a old commodity trader, okay? Like I used to trade monster amounts of energy. And we would find ourselves $100 million off mark, man. Okay, in the early days, like we were doing stuff on pieces of paper. We woke up one morning in 1991 on a Friday, I think a Saturday morning, realizing we were buying and selling natural gas, proprietary. And we're not brokering. We're literally buying 1 billion cubic feet a day at $4.23. We're long, $4.23. We wake up Saturday morning, we realize, oh shit, man, we're short over 500 million cubic feet a day. Somebody missed a zero. Okay, Saturday morning, like go figure out 500 million cubic feet a day at $4.23 on a Saturday morning, and the market opens Monday. We never did that on chalkboards again. Guess what we were competing with then? Excel spreadsheets, man. We had a guy named Don Sinclair running around with his Excel spreadsheet. He was running all of California. That guy never was in an emergency. He knew exactly how many therms he needed. We're running around with our heads chopped off, man, because we were living in an old age. We were like, the chalkboard's cool. We can do the chalkboard. So when you go through one of those experiences, like if I'd had the Node 40 tool back then, I would have been playing golf on Saturday. Wouldn't have made that mistake. Okay. So it just shows you like markets move really fast. And if you don't have the tools in that marketplace, it's like not having the proper tools in a really, really, really bad car crash, right? Can openers not getting me out of the car. I need some precision tools, get me in, get me out very, very rapidly. So when I met you guys, I'm like, oh, wow. So the first thing we did is I took my whole position, gave it to Sean. One, I wanted to know, how difficult is it for a dumb guy like me to actually get the data to you, right? That wasn't difficult. I mean, the most difficult part was your language, APIs and this button and that button. I'm like, huh? What? So I put all of my data, and it wasn't a massive position. It was $4 or $5 million of crypto. And then I gave the same data to my accounting firm, and I was going through a heavy duty litigation thing with an ex-wife. She had 9 lawyers, so they want to know what I'm doing. I didn't really quite know what I had. And I sent it to my forensics team. They charged me $40,000, man. Takes a week to tell me that I owe $700,000 on a $4 million position to the U.S. government. And I had never sold a drop of Bitcoin. And I'm like, oh my God, this company doesn't know how to calculate this. I give it to Sean. I think Sunday, I give it to Sean. And 1 hour later, Sean says, you've overpaid $79,000 and 32 cents. I mean, some crazy perfect number. My accounting firm, the Brilliant Forensics, who I still have a relationship with, they won't do my accounting in the future unless they buy Node 40. They will not, because they're going to mess it up. Even if they don't mess it up, they're going to give it to Katie, and Katie doesn't have any other digital assets, nor does she have any Bitcoin, nor does she understand what blockchain is. So as soon as she picks up my account, she's got a headache. My professional has a headache the moment she picks my account up. They saw a liquidation event as me moving from Coinbase Pro to Coinbase. And they saw
that's what I figured. Yeah.
There's 6 million people doing accounting and tax in the United States on legacy assets. You tell me that there's not going to be 3 million tax and accounting people touching digital assets. You don't understand markets. Okay. And those 7 million people that are working for 43,000 tax and accounting and audit firms are never going to a blockchain school. They're never going to a digital asset. They're never going to read the Bitcoin standard. They're never going to understand this. They are my age. Okay. They're making 70 to 180 grand a year. And they're just like, the vast majority of these people are not going to learn this. So I looked at your tool as, well, you're telling me you guys built this. You're not accounting and tax people. That's the other thing I noticed. All your competitors, the firms literally, except one of them, were all accounting and tax companies. And I'm like, they're going to try and compete with Ernst & Young. They're going to take a digital position. They're going to go do some white labeling stuff with the Deloittes of the world. They're going to get some information. And then they're going to start competing with the very company they said they were trying to. Why? Because they're an accounting and tax firm, man. And they're going to use their digital expertise to blend into the legacy businesses. I'm like, oh, okay, that's not going to be good, because the hosts, the Ernst & Youngs, are going to crush you guys. I'm going to let you do that. Plus, in these disruptive environments, you don't want to do that. You want to stay in your lane. So I looked at this as, oh, wow, we're not accounting and tax. We don't even want to. Perry told me, he said, Gary, we provide the data to your professional.
Yeah.
It is irrefutable data. Okay. They can double check it, triple check it, do whatever checks they want, but it's not going to be on your, it's your expense. It's going to be at their own expense. This tool can address what it normally takes a Fortune 500, big firm, 300 to 500 hours to do. We do it in 1 hour because we built it to do this, to do risk management every day for some of the largest traders in the world. When I heard that, I'm like, awesome. Okay. Because I know my risk management team in my old world, they would love this tool, dude. I don't know a risk manager. My guy was Glenn Laphart was his name. If you ever had a risk manager for years, you remember the guy's name, right? Because he's like, bro, you're way over your position limits. We need to get you new limits. Or he would have loved this tool, man, because it keeps traders really, really, really honest, right? And this was a Fortune 30 company. He didn't want to end up in a lawsuit with a bunch of shareholders or have a filing from the IRS. I mean, he wanted to make sure that his data was as good as what the traders' data was saying. Quite frankly, the traders, though, never trust risk management because they're using their own internal accounting. So the Node 40 piece just fits so many angles for me. I love the people. I love their background as computer scientists. I love that they did this from a trading perspective to take care of their own families. And they just happen to be at the right place at the right time to come up with a really, really cool solution that I think, I think Node 40 is minimally a couple $1 billion business in the next 4 or 5 years, simply from supply and demand metrics, whether it's a chain analysis, a U.S. government, an Ernst & Young, a KPMG, a Nexus, Lexus, any kind of big data company, and that you find me data that's more cool than this, digital money, digital assets and money. Some of the wealthiest investors in the world, of which I think less than 15% have actually come into this space. It's a once in a lifetime opportunity, and it has no underlying risk. The business itself doesn't have any risk. It has no commodity risk. And it gave me a large position in an industry that I love.
Yes. So I was spent most of my career at a Big Four accounting firm.
What did you study? You studied at a really good school too, didn't you? And then
I went to law school. I'm an attorney. I'm an attorney, and then I got a tax LLM. So that's how I ended up more in the tax and accounting space. So I'm a tax attorney by trade. So I spent a couple of years at some law firms, and then spent most of my career at a Big Four accounting firm. About 10 years, 5 of them I was a partner in their financial services group, and mostly working with super, super large multinational companies or large PE hedge or investment funds that had, stakes in various companies or financial products, et cetera. And I left them in about sometime in early 2021.
How long have you been there?
I was there 10 years at that. Okay. And plus,
that's a big move, right? I mean, leaving there 10 years, that's a big move.
That's a big move. No, I know that's a big move. And then after that, I had a close friend at one of our, more indirect, you could say, competitors / companies that are maybe have a symbiotic relationship with us. It's some of the tracing type companies out there. I spent about a little less than a year there. We were working on a lot of deals that involve specifically tracing digital asset transactions and using tracing tools and data to trace transactions for tax purposes, to potentially investigate criminal behavior, evasion, and maybe even more wider use cases, helping the company think through wider use cases for the data. So they were always looking to partner with people like a Node 40. And it was there that I met Perry and Sean. I knew Perry and Sean. I talked to Perry a bunch of times, so I knew he was number one. He was someone that I could work with, like someone that you could actually talk to, give him your ideas. He'd take them into account. It wasn't just him, saying, I run the show. It's my way or the highway. I don't really care what you have to say. So he struck me as someone you could partner with to help build a company. I met you down in St. Pete, and you were a big factor convincing me. I think it was like a bunch of things, Gary. It was number one, I was, given my background, I was more familiar with dealing with enterprises, and you guys were going after an enterprise solution. So that drew me. That was one thing that drew me to Node 40. I was familiar with that. Sean and the team's data accuracy. So because I had a similar feel that others have in the marketplace. Like, what distinguishes Node 40? Why care, right? Why are they different than any other companies? And to me, what huge capability is the data accuracy. And if it's not accurate, like it's a new protocol, the desire to get it absolutely accurate is extremely important. That was important to me. And I said, wow, that's one big way we could distinguish ourselves as a data company, a company that provides data that could be used by accountants, depending on whatever position they take, large enterprises, et cetera, agnostic to specific accounting rules. We're not trying to be, plug your data in and we're spitting out a tax return like TurboTax. That's not what we're doing, right? We're not trying to sell the consumer. We're trying to provide super accurate data for really high-end individuals or companies to then take that data and say, hey, look, like you said, it's a risk management tool. I've got the data to back up my numbers, and that data is absolutely accurate. And if you want to review the data, go ahead and do it. We got a full-on audit trail. So those were the types of things that were really important to me.
How close are you getting? It's like exact. And then assets, that makes sense to me. Like there's no reason to have a rounding error, right? But how are the firms determining? I mean, you guys told me a story about one of the top 4 using 7 different companies, and all 7 companies came up with something different.
Yeah, different companies coming up with different numbers, and there's a perception of that in the marketplace. I know a couple of experiences I had this past tax year with Node 40. So this past tax year was my first year really going hard on the data, and number one, we always demo. You'll see in our demo, we have tools and structures in place to try to show why we're accurate, and if we're not, to try to determine where the discrepancy lies, so we can fix it and determine, like, look, there may be an adjustment in the data that needs to take place. Number two,
so by that you're looking for anomalies in the numbers, right?
Correct.
And if you see an anomaly, something that steps out, that gives you it's a leader is for you to go and like pull the string and figure out, well, those are a bunch of airdrops that just don't even mean anything or whatever, right?
Bunch of airdrops that don't mean anything, or your data is not, you're missing some data or whatever it might be, right? So, and then we'll isolate those. Number two, another thing that I thought was cool, and we continue to enhance this stuff, right? I mean, this, right, Gary? We'll continue to enhance this. So, one guy said, hey, look, I've got this guy moving your platform from one of the other platforms, and his numbers for this year on the other platform show this, and your numbers show that. How do I actually see where you got the cost basis on some of these transactions? Let's do some stress testing on some of this stuff. Not hard. I show you transaction that ETH, right, that was purchased, moved to wallet number 2, wallet number 3, wallet number 4, interacting with this pool, pulling it out of this pool, coming back. I can trace through all that and show when it was originally acquired. I just, I go on our platform and I'll do that for you. I.e., some people say sometimes, I hear in the marketplace there's black boxes. We're not trying to be a black box. We want to be able to show like where exactly the data came from, so that when you stress test this, you can say, hey, look, I'm just gonna go into your platform, pick out the top 30 transactions, right, and just test them, right? Let's say you get the traders doing 100,000 transactions, whatever. Take 100 of them and test them out, so okay, this stuff is right. And that was pretty cool to me. I thought that was a cool experience, and I thought it would be something that we could use down the road to show people hey, you're not just plugging in the tool and getting a bunch of numbers. You can actually back those numbers up.
Yeah, that's where I want to go to though. What do you see as the difference? I mean, do you see, because you clearly hopped over here.
Yeah.
What do you think the legacy firm's biggest challenge is? And now you spent a year with us. We've been selling into these companies. I mean, I think one of our benefits is we don't send salespeople to sell stuff to these companies. And this is what I love about you, Sean and Perry. You're intellectually very long capital. Like, philosophically and intellectually, you guys are really, really good. I bring down the whole quotient. But when I look at these other companies, what do you think their biggest issues are in adapting and because as we started this conversation, I told you, hey, look, I've always been right at the very beginning of some type of really substantial change. And what I've learned is that large companies don't adapt well. Their cultures just don't let them move quickly. I was talking to my old boss the other day. He was complaining about ExxonMobil. He's like, it took us forever, man. I could never get a deal with ExxonMobil.
Yeah,
years.
I know.
And I tell the story of, hey, it took me 3 years to get lunch with ExxonMobil, much less get a deal. And he and I are still talking about two things. One, how slow the big players moved. Still to this day, 20 years later, there's so many missed opportunities, but also that he and I underestimated grossly the opportunity. Because, I mean, here's a guy my age, man. He was 27 years old. He helped build a $30 billion real company, not a poof, we're doing Facebook and not making any money, a real $30 billion company. And now he's the chairman of the board of Williams Energy, the biggest energy player, infrastructure player in the United States. And he will literally tell you, oh my God, man, we grossly underestimated this change. And I've seen that now 4 times. I am certain that we are grossly underestimating what's happening here.